traders, welcome to the TMT stock market strategy video for Thursday, December 29th. Alright, well, we did get a little bit of selling, which is tax selling. I'm going to label that as a tax selling day. We did talk about the T+3, trade day plus 3 days. That was on Tuesday morning's video. I said look out for some selling pressure because we did not get any selling, any tax selling at all this month. And the reason is because most of the investors and a lot of the hedge funds actually are holding out for that new tax reform for 2017. So most likely they will be selling in 2017, and that's where that may become a big problem for January. So we talked about that. Just real quickly, I'll recap. You have to be careful because now we have no real selling. We had 1 day of a move lower, which still is, it's refreshing to see that sellers are out there after a 20-day move higher on just an assumption on what Donald Trump's going to do in 2017 when he takes office. So to me, I think that's stupid, but nonetheless, we trade what we see. It's not what I think or anyone thinks. So let's please make that clear. That's just my thought process at all. But when you see algos just going straight up, you remember what happens. Whatever comes straight up comes straight down, and that's what really worries me. Because we still have the Dodd-Frank Act still in place, and there's very little support when it comes to selling pressure. There's a lot of technical support, but banks can't trade. They can't support their stock. You got to be very, very careful when it comes to something like that. But anyway, going into the last couple days of trade, I'm still looking for some selling. I'm really looking for a good move lower tomorrow, which is the last day of the year. And then the last day to go sell your stock, okay, for your loss. So my guess is I'm looking for candidates that will have, tech selling candidates such as Twitter, right? Why? Well, Twitter was a takeover target all year, and they were in talks with several companies, and the pundits who retail come in and look to buy it, and then on the spike up, they did not sell around 25. So now they're holding out, hoping that there would be a takeover rumor, right? So now there's no takeover rumor at the moment, and sure enough, there's nothing going to happen between today and tomorrow. So they sell at the last minute. And that's just, again, a generalization of what happens. And then once that selling pressure is done, the stock usually bounces pretty hard. So Twitter's another candidate that I'm looking for. Even the VIX, VXX, we had low volatility since July. And people were buying it based on a big move higher, which is normal. I mean, that is a normal, low volatility. We didn't suspect that volatility would be this low. So VIX could bounce, stuff like that. Look for candidates like that. They are good tax selling candidates for a reversal, meaning a bounce higher. Okay. Anyway, getting to the markets, we have warning flags all across the board. We have extreme complacency. We have the consumer confidence, which I did not mention yesterday, was at a 15-year high. 15 years. When you have a consumer confidence reading that high, you sell stocks. I mean, that's basically how it works, right? You sell stocks. VIX at below 12, you sell stocks, right? You have overbought readings that are extreme. Bonds at extreme lows. Gold extreme lows. Dollar ripping higher. Interest rates higher. That's just the perfect candidate to sell stocks. Right now we haven't seen that. That does not mean it's not going to come. It may never come, right? Because what we see, we need triggers, right? We just don't go out and sell stocks unless you have a very large account that you can do that. And basically what we say, quote unquote, you can be wrong to be right. All right, so that's not the case really for most of us. So I'm just putting out use caution. We trend traders, so we trend what we see, even though the markets are extremely overbought. You can't. There's no reason why you can't take a dab at the long side or even the short side for that matter. Like yesterday was a perfect example. Yesterday was a nice high probability trade because markets were rolling over, and finally, usually when you get that bull flag or bear flag patterns, we had them for years. They don't do that anymore because of the algorithms. Very little. They just rip straight up. They consolidate and they go higher. So that's just something that we're dealt with. But anyway, here's the VIX. Just wanted to show you a couple things I want to show you today. Now, this will be the last video for 2016. I am taking the day off for the videos for tomorrow. But the reason why is I'm putting out a very large video for 2017. So please look out for that video. It'll be well over the 10, 12, 13-minute video. Going to go over a whole bunch of indicators, monthly charts, weekly charts. So it'll be a long video for you guys to look at over the long holiday weekend. All right, so there's the VIX. One of our indicators in our trading model, very reliable. You guys heard me say it before. The NYUD with volume. This is deteriorating, right? After when you get that high, we still had the lower high from here, right? So that's to me was another red flag. But when you get this, when you're way up here at all-time highs, that to me is extreme caution in trading. So when you're trading and you see this, remember, this is not just one of our breadth indicators in our model. There are many of them, and they're all signaling use caution. Now, remember what happens. We could have news trumps the charts, and all of a sudden, Donald Trump says, "Hey, no more tax." I'm just giving an example. Something stupid. The markets rip higher. This thing just explodes higher, and then it alleviates any bearish symmetry, right? Any bearish lower lows, lower highs. So that happens too. But at the moment, it's not happening, and this is telling me use caution. Next is our money flow chart. We've talked about this last week, right? And I said, look, this to me is not anything bullish at all. Here's our 250-day moving average, which is about a year's worth of trading. We're way, way, way below that. Now, I understand it's the holiday, but if you go back, right, this wasn't the holiday here, right? We were just right in here in early November, right, in December. And look at this in here. We had this big move, right? And all of a sudden, look how much we dropped. And here's the advanced accumulation distribution line, right, on the 50. We're starting to roll over here. So there is some distribution happening here. Okay, on balance volume starting to roll, not really doing much of anything. But look at the truck and money flow, and look at the money flow. All right, lower lows, lower highs. We're actually negative. So if you hear the pundits, oh, there's a lot of money on the sidelines, whatever, that's the retail crowd that are still in, whether they're on the sidelines or fully vested here at the highs. That to me is the degree for disaster. That's the recipe for disaster. Okay. Until something changes, and right now it has not changed. Okay, really nothing has changed other than the assumption of what Donald Trump's going to do on his policies. To me, you have to be careful. Okay, just again, this is not something that I would be putting new money to work. Okay, not saying that, hey, maybe you hold on to your stocks or your portfolio. That's great, but just buy some protection. VIX is at all-time lows, basically. So, this is what I'm pointing out. Use caution. That's all I'm saying. I'm not telling you to get out and go short the market yet. There'll be plenty of time for me to tell you that. Spider's 5-minute. You can see here, we're in a range for many, many days. I think maybe two and a half trading weeks. We've been range bound. But when you get trades like this, and let me just point out, you get this trade here. That's a no-brainer trade. We took out that swing high right here. That was a nice little quick long. And here, once you break down, you take out that low, you look for that next back test, which we got finally. You get a no-brainer trade. These are the no-brainer trades that we teach you at TMT here, okay? And what's in our trading room. So this is a nice little trade here and here. But you can see, just in general, we're still within a range. And now we're hanging below it. More than likely, we'll probably pop up today and see if we fail. If we fail again, then you could start looking for some shorts on any new rallies. UUP, we're still here. It looks like we have an island top here until we break out of this. If not, we'll probably look to fill the gap. And if we do fill it and continue to go lower, that might be a problem for the dollar. But remember, the dollar is being bid up right now on safe haven money coming in. Okay, what do I mean by that? People afraid of the market? No, I think that the smart money that people have, traders, investors have tons and lots of money. You can't just put it in a bank. They'll put it into the dollar right now and gold, and I do believe bonds will start to pick up too as well, because these are the three safe haven trades for 2017. I think bonds. I think the rates have made a generational low. You guys heard me say that since July. I think for a reversal trade, though, for a move higher, for a fill the gap trade right up in here, I think bonds could be a nice little long. Right now, we haven't taken out that swing high. We're right at it, and here's the 21 EMA. So we need to break back out of it. The first target would be that 50-day moving average, okay? That's a TLT. Next is going to be GDX. Again, same thing. Had a couple of emails yesterday. Some great subscribers, great followers that follow me, asking me about GDX and gold and stuff. Remember, it happens very, very fast, guys. So it's the fact is that this broke out of a sideways consolidation, and you could have bought the GDX, but you have to have your stops right around about 1840. So you're looking at about $1 stop in GDX. Now, if you didn't want to take that and you want to really get your confirmation, we already filled the gap here. why don't you wait to get a little bit of a pullback to now, which would be support at 1940, and see if we break higher. Remember, we're still in a downtrend. This is still in a downtrend. Really, there's plenty of time to make up any lost ground. We're still making lower lows and lower highs here, and we're still below a proprietary price channel. So, to me, I'm not looking to do anything yet. Matter of fact, I'm not looking to buy gold at all the next couple of days. I'm looking for some tax selling advantage, or even a good market trade in, SSO, spiders, or whatever. But something like that, Russell. But gold, I'm not looking to do yet. I do think gold's going to shine again in 2017, but it needs to hold in these areas here. If we start to get below down here, this is going to be 2016's low. We could actually flush one more time. And remember, I mentioned that watch the flush, watch the flush. Now we're breaking down here. It is a spot where it could bounce, okay? And anything's possible. But if you are going to try it, you got to try it with a tight stop. GLD, same thing. You can see here, right? We're holding in here. I think you get to, I honestly just see, it's just too easy. And this is just another little bear flag here. I need to see a little more evidence before I start to jump in. I don't see any real big movement here in a MACD and RSI, so I'm using caution here on the long side in GLD and GDX. Spiders, you can see here, right, starting to roll over on indicators. We hit the 21 EMA. Now we're looking for the next spot's going to be the lower end of this big bearish rising wedge, which is coincide nicely with the 50-day moving average. 60-minute, you can see here, I said this is the breakdown area here, 224. 224.75. We did break down. Now we need to hold. So we get a little bit of a back test. I'm buying early this morning. We start to break down. That low from yesterday, 224.20, is going to really execute a nice short signal that we can start looking for shorts on any bounce after that trigger. 60-minute chart. Next is going to be IWM. We have that M top formation that's in place. We stop. Where do we stop? Right at the neckline. Okay, 134.75. And last is going to be the Qs. We had that bull flag breakout. We're back into the flag. So this bull flag has to hold today. Otherwise, it'll be negated as of today. Hope it helps, guys. Have a great day. Look for the big video over the weekend. And also, a happy new year, prosperous one, and safe one for all of you and your family. All right? Take care, everybody.